Hi there folks. Even though I'm not a huge fan of clickbaity titles, there really isn't a better way to put it. As you might already assumed, the Canadian housing market is about to experience some rather difficult times later this year and might even face a crash. But it isn't going to affect all the provinces in the same way. Today we'll discuss the future of the Canadian housing market and the government's massive updates with $10 billion in housing measures. Of course, I'm talking about the foreign investors ban, the new programs for the first-time home buyers, and the new tax-free home savings account, which is literally a perfect mix of TFSA and RRSP. And I will explain in details how the program works and when it starts. Trust me, it is great news. And just before we start, I kindly ask you to support my work by subscribing to this channel and liking this video. As annoying as it might be, this is how the YouTube algorithms work, and that is the only way for me to improve constantly and promote relevant and free financial content to people. So, let's start today's video with the potential Canadian real estate market crash and what we should know to prepare for it. Canada's extremely low interest rate policy created a wave of speculative housing demand, as many people are trying to buy homes quickly and lock in those low rates. However, it all could fall apart momentarily once the rates climb higher, ending the house prices growth. Logically, the higher interest rates create less demand for housing and cool the market down. For example, the BMO stated that the market could be in a correction or worse, which is kind of a vague report, but still paints the picture. RBC analysts, however, were more precise. A few weeks ago, the RBC risk model predicted Canadian real estate prices to fall by 30% over a 12-month period in a worst-case scenario, or to show 0.5% growth in a best-case scenario. And mind you, a 30% decline in prices is normally large enough to be considered a market crash, but it's also important to keep in mind that the prices in Ontario grew by over 30% in just a year. So even that kind of severe decline RBC predicted shouldn't be considered terrible. It's not the end of the world. When one of the biggest banks expresses worry about the housing market condition, it's best to listen, especially if you are planning to buy a property in Ontario or BC, because you might be in for a huge surprise. Just a reminder that after the pandemic, an average house in Ontario grew by up to 50% in price compared to 2019. So in the worst case scenario, investor would only lose a single year of appreciation, which is not a big deal. For what it's worth, it would only help the struggling first-time home buyers and finally cool down this crazy and overheated market, because not everybody is willing to move from Ontario to Alberta the way I did it in search of an affordable real estate. In Alberta, the prices didn't explode in the last 2 years and just started showing some positive growth in 2020, after 7 years of stagnation. And I have no reasons to believe that the Alberta market would take any hit at all, not even in single digits, while Ontario most likely will. Personally, I'm quite bullish on Calgary's market, and I explained why in my very first video on this channel, while providing some arguments to support that view. Economically speaking, the province is growing and the housing market will keep on rising as well, but in a more stable manner, without any crazy spikes in double digits like some other provinces last year. And so far, Calgary's real estate market is growing by 6% a year, and it will most likely continue growing in the same manner. Okay, since we've pretty much covered the real estate, let's talk about even more interesting news. I feel it's important to mention Ottawa's foreign buyers ban that's designed to stop soaring home prices, and shortly discuss the new programs for the first-time home buyers, as well as a new kind of a TFSA. Bear with me. So, what's going on? The PM government just added $10 billion to housing measures with the goal of making real estate more affordable for Canadians and encourage builders to increase supply. It's no secret that the houses' prices are out of reach for many, with the national average price of a home of $800,000 as of February this year. It is a combination of factors: ultra-low interest rates, high levels of immigration, the wealthy international buyers who are parking their money in Ontario and BC's real estate, and low level of construction. Those are the reasons why we have an affordability issue, but new measures are created to change just that. First of all, the federal government is going to ban non-Canadians from purchasing properties in Canada for 2 years. However, all refugees, international students and individuals with work permits would be exempt. In my opinion, it was a bit foolish not to exempt international students, because it is a great loophole for foreign parents to buy real estate through their children. Essentially, you send your kid to Canada and buy him a 2 years program at the college, he goes there to attend, and meanwhile you buy a house somewhere in Toronto or Vancouver through your kid. So there is still some work to be done from the government's perspective. Now let's talk about the new tax-free first home savings account that would give first-time homebuyers a new tool to save up to $40,000 towards a home. Functioning like a registered retirement savings program, contributions put towards this account would be tax-deductible and non-taxable, so pretty much like a mix of TFSA and RRSP. This program will come at the beginning of next year, so I suggest you start saving some money now to contribute to that account when we have a chance. Starting next year, Canadians will be entitled to contribute up to $8,000 per year to that account, which allows them to save and invest money in the most tax-advantageous way. Many of us already maxed out our TFSAs, so that's indeed great news. And while TFSA helps you grow your money tax-free, say in the stock market, you don't get a tax break when you make your investment. So this new account, again, is a little bit better than that and is perfect for your down payment, for example. It is tax-free in, tax-free out kind of account, as the budget puts it, and I am planning to make a separate video about this new account once more details are available. And if you like this idea, make sure to support it with your like and subscription to this channel. Additionally, the federal government plans to set aside $4 billion over the next 5 years to develop 100,000 new housing units. The budget also set aside $1.5 billion over 2 years to create 6,000 new affordable units, with at least 25% of the funding directed towards women-focused housing projects. Well, big news, but with 400,000 new immigrants each year, I really think that they would need to multiply that number by 4 at the very least to keep up with the immigration, population increase, and increasing demands. Anyways, that's it for today. Thank you so much for watching. I hope you found this video helpful and enjoyed this new style kind of format. Next week, I am going to film some houses in person, maybe film outside. You know, it's beautiful outside, it's sunny, and kind of, you know, make the content more interesting than just sitting on my sofa and record for you here all the time, because I'm sure this kind of background is nice, but it gets repetitive. So expect more videos outdoors, nature, you know, maybe closer to the river. And again, don't forget to subscribe. I'll see you real soon. Whack or wake? I don't remember how to pronounce wake. Wake or whack? Like, you see the problem with second languages, sometimes you aren't sure how to pronounce specific words, you know, like for example, wake. Do you pronounce it as wake or as whack? I don't know. Let's see. Wake. How to pronounce wake?
Wake.
Wake. I was correct. Okay, cool.